Welcome to your market brief for Monday, December 16th from the NASDAQ market site. I'm Caroline Woods. Let's get the week started. First, on the earnings front, we'll hear from FedEx, General Mills, Micron, Nike, and CarMax this week. Plus, we'll have our eye on fresh data on U.S. housing, manufacturing, and labor. Internationally, the Bank of England and Bank of Japan will both announce monetary policy decisions on Thursday. And as the world awaits these announcements, our next guest is urging investors to keep buying stocks in 2020. Hyzy is Chief Investment Officer for Bank of America Private Bank and Merrill. Chris, thanks so much for joining us.
Thank you, Caroline.
All right, so in your research, you have several potential bullish catalysts for 2020. You have a continuation of accommodative monetary policies. You have a de-escalation in the trade war with China. Economic growth bottoming and global growth bottoming in Q1 and election uncertainty fading. So kind of with all of those on the table, lay out your base case for 2020. It seems pretty bullish.
Well, it sounds like we should just close out 2020 already with all those steps in place. But I would say we still have a lot of wood to chop for sure. There's still risks out there. Each year we come into a new year, there's always 3 or 4 big risks. And the question every investor has to ask themselves, will they fade those particular risks during the year? We think so again. The biggest reason is accommodative monetary policy is the exact opposite of fourth quarter from 2018. There's a good chance we could have the highest level of money supply ever at the end of 2020, which creates a reflationary environment. That's one of the reasons why we expect global growth to bottom in the first quarter, and then ultimately U.S. growth to actually surprise, leading to better profit growth and potentially 1-point multiple expansion. That's where you get a little bit of the Goldilocks feel heading into the election.
All right, so you say that if that scenario plays out, equities are your best bet as opposed to fixed income. Why?
Yeah. Fixed income has had an incredible 20, 30-year span of inflation coming down, and we still expect low rates overall, but bottoming off. And I would argue that $17 trillion in negative yielding debt in September and October, one could actually fathom that that is record low interest rates, probably a bottom in worldwide interest rates. At one point in time, we were at 5,000-year lows in interest rates, and the G7 yield was an average of 0% for the 10-year yield. So on a relative basis, equities versus fixed income, from our perspective, is basically a no-brainer. And when you think about that in terms of portfolio construction, everyone gets caught up in what's the target of the S&P. And I would rather say, what's your risk-adjusted expectations? And that's where equities are much more attractive than fixed income.
So you describe this as a world in transition. There's still a lot of uncertainty out there. So let's talk about within equities, which sectors are most appealing to you for 2020 and also what you're avoiding.
Sure. When you think about factors of what is a good investment, you have lower supply or supply that's hard to get and demand that's increasing. So when you think about that, the sectors that provide growth, a little bit of value, dividend yield, and free cash flow. You find that across all sectors, but in particular, technology, a good portion of technology. And because industrials have basically been put off to the side because of the trade war in 2019, there's better value there in the industrial space. You need global growth to bottom. So we see some very good industry groups within particularly aerospace and defense in industrials. And then when you think about consumer discretionary, there's a whole slew of good companies in there that have multiple different industry groups. So it's really trying to find the factors across sectors. But if you had to think about it, half of technology or so, industrials, consumer discretionary, and then pockets of healthcare.
All right, good to know that despite some of these record high valuations that we've seen, that there's still value out there. But I have to ask, because Wall Street has been all about trade for quite a long time now. Positive trade headline, market goes up, negative, it goes down. We've only just begun, I guess, phase one. Right. Mohammed El-Arian was on last week, and he said it's going to be a long time before we have an actual deal. Does that leave us in a gray kind of range-bound area, or could that derail your bullish outlook?
You know, that's a really good way to put it. I do think we're in this gray area, this murkiness, where phase one, now that's done. Obviously, you need it to be signed, potentially first week of January, maybe second week. But the real way to think about this, is it a deal or is it a pact? And it looks more like it's a pact. And when you tell somebody that there's going to be phases of anything, they automatically get more patience. If you say there's going to be 3 phases of something, you wait for phase one. Now the patience is gone. Now you're going to see a little bit more impatience. Where's phase 2? How long is it going to take? Is it going to actually happen at all? Forget about phase 3 for a second. So heading into an election year, you're probably likely to see some negotiations on phase 2. De-escalation is still what we would call the name of the game for 2020. But after the election, there's a very good chance we could re-escalate again.
Okay, Chris, thanks so much for joining us. Really appreciate your insights.
Thank you, Caroline.
All right, we're very excited about a new initiative at Barron's. We want to recognize top female leaders in finance. If you know someone who fits the bill, nominate them for the inaugural Barron's 100 Most Influential Women in U.S. Finance. All you have to do is go to barrons.com/100women to nominate. And that's a great setup for our next guest. Rachel Glaser serves as Etsy's Chief Financial Officer. Prior to Etsy, Rachel held senior roles with Yahoo and Disney. Overall, she brings 3 decades worth of financial leadership experience to any boardroom she enters. We're so glad to have you here. Thanks so much, Rachel.
Thank you.
All right, so in the past year, Etsy's been on a bit of a roller coaster ride. We've seen shares as high as 73 and as low as 39. I'd say somewhat volatile. I guess, what are investors missing when looking at your company strictly kind of through the lens of recent stock price performance? What are they missing?
So Etsy has grown significantly every quarter since new management came in May of 2017. We've been able to successfully grow both the top line and the bottom line. So last quarter we put up close to 23% growth in our gross merchandise sales on a constant currency basis. Revenue was over 27%, and the bottom line was over 20%. That's a pretty rare thing to have both top and bottom line growth. And earlier this year, we gave long-term guidance that suggests that we would grow 16 to 20% over the long term, which is faster than the e-commerce sector in general, which implies that we take share. So when we reported the guidance for the rest of the year, it reflected a little bit of deceleration on the Etsy core business, and I think that took some investors by surprise. That's an indication of us investing this year for longer term growth. We laid down some pretty big initiatives in the third quarter of this year, and they need time to optimize and develop.
One of those big initiatives was helping sellers offer free shipping, providing them the tools to offer free shipping, but it does seem like these longer term investments have been impacting short-term gains. I mean, is that a bad thing?
No, so Etsy has 2.5 million sellers. That's sort of what makes Etsy unique, is that we are a marketplace of millions of small, independent, creative entrepreneurs. And with our platform, we give them global scale so that they can compete with the big guys. And so that does require us to look at what are the things that we can give them so that they can be successful. When they're successful, Etsy is successful. So for instance, there's 2 good examples. You mentioned shipping. So we believe that in a world where consumers are increasingly conditioned to expect shipping to be free, we needed to set our sellers up for success. Now, shipping's never really free, so we gave them the information and education to show that you don't break out the cost of the materials or your labor separately from the cost of the item. Why are you breaking out the cost of shipping separately? Let's add that all into one cost so that shipping doesn't appear in the conversion funnel as a completely separate cost.
So there are 44 million active buyers from well over 2 million active sellers. 87% of those active sellers are women. What are you doing, aside from these free shipping initiatives, to really empower sellers, to help them go head to head with some of the big retailers?
So we are a platform that has all of the tools, all of the business tools that they need so that they can focus on the thing that they do best, which is their craft. So for instance, we have a lot of marketing tools for them, and we put a lot of our own P&L to work in marketing. So we invest a lot in performance marketing, and more recently we've invested upper funnel, which is primarily TV and digital video, to really drive more traffic to their shops. And that's investment that we make in our brand, but that also drives a lot of attention to their shops. We also provide them tools that they can advertise for themselves on Etsy so that they can get more prominence in the search results. And then we provide them tools in the shipping arena where we can use our scale to get them preferred pricing so that they can ship competitively with other e-commerce players.
Thanks so much, Rachel.
Thank you.
And before we go, you voted in our MarketWatch poll on the one streaming service you can't live without. The choices were Netflix, Amazon Prime, Disney Plus, or another option, and over 60% of you chose Netflix. That concludes today's Market Brief. I'm Caroline Woods. Of course, we want to hear your thoughts, though. Comment below and tell us, what was your biggest purchase of 2019? A house, a boat, maybe a houseboat? Let us know.